Mm.
Hello, Xin. How are you?
Hello, good morning.
Um, do, do you know what day it was yesterday?
Sorry,
Do you know what day it was yesterday?
what day was yesterday?
Yeah,
It was 20th of October.
yeah, but it's Double 11 shopping festival started.
Double 11. So I guess
Shop,
that's November the 11th
yeah, but right now, yeah,
already.
many businesses start pre-selling
Wow.
this order this year. And
Okay.
did you want to buy something?
Well, you know what? I continuously do online shopping throughout the year, so it doesn't really make a big difference for me,
Yeah,
I
really.
guess. Yeah. But
Okay,
sounds exciting. Yeah.
that sounds excited. So
Did you?
yeah, I'm going to buy something, and
Okay.
I recommend you to buy this. So for this one,
What is this?
it's a Thomas, and I
Okay.
bought it last year, Double 11 shopping festival, and
Yeah.
I got 50% discount.
You got 50%
Yeah,
discount.
it's
That's the benefit of shopping during this shopping season, right?
yes, and
Okay. How much was it before?
before this, 200 yuan.
200 yuan.
Yeah,
So
but
that's about $30.
yes,
So you got 15. Wow.
yes.
And what's special about it?
And it's smaller and it keep
Keep
water for a
warm
long time.
for a long time.
Yeah,
Okay. It's
and
very cute. So anybody who's looking for a thermal could,
yeah,
not that I'm trying to promote this particular model, but yeah, I think it looks pretty cute. And for 50%, that's pretty good.
yeah,
Yeah, maybe I should check out the Double 11s. Yeah.
yes. And although the economy affected by the pandemic, so there are lots of people prefer, including me, prefer shopping online. I think it's a good thing. So what do you think?
Well, I think anyway, we have been shopping online for quite a long time, right? In China, we have many shopping portals. Definitely since the COVID-19, we have been shopping more. Um, yeah, I think it's fun. On the other hand, I think we have to be careful about all the packaging, all the waste
Mhm.
that online shopping entails. But other than that, I don't see a problem with it. Of course, it's an art, right? Whether you can find the right product that you wanted, whether the cheaper price is necessarily means good quality, because sometimes you get something in your hand and you're like, this is not what I'm looking for, and then you want to return it, and it's extra cost and so on and so forth. So yeah, but it's an interesting experience. I think I've graduated from the College of Online Shopping already.
Yeah, okay. And I have another small gift for you.
Oh, what is
It's
that?
like tickets. It's just cheesy pickup lines, from your heart, from my heart to your heart.
Oh,
The
我
part
心里
station is
站 to 你
yeah,
心里站 from my heart to
to
your
your
heart.
heart.
1314,
It's
what
just
does it mean? 13,
for a
14.
long, love you for a long time. So it just show how
Oh,
much I like you. Yeah, I'm a
oh,
big fan
so
of you.
sweet. Thank you so much.
Yes,
This is
yes,
really
because I
sweet.
know you have a lot of travel for work.
I would love to, but haven't been able to travel for fun for a long time. So this is
Yeah.
really sweet.
Okay.
From my heart to your heart.
Yeah.
I'll keep it. Thank you so much.
I
So
can't
sweet.
wait to see your show. So
Thank
I
you.
talk to you later.
Yes, talk to you later. Stay with us.
Okay.
Yeah.
See you.
Take your thermal. Thank you. Oh, sweet. Headline Buster, brought to you by The Point with me, Liu Xin. In this series, I dissect stories that are making headlines around the world and talk to my guests to compensate for the missing pieces of the puzzle. So join us in real time by sending us your comments or questions via the CGTN page on Twitter, Facebook, YouTube or Weibo. If you're watching this live on the CGTN application, email me at thepointwithlx@cgtn.com. Let me know what you think. We live stream Headline Buster on Thursdays at 11 a.m. Beijing time and air the segment on TV at 11:30 a.m. on Fridays. So do join us during the live streaming and get in touch. We would love to receive and possibly read out your insightful comments. So this has been a week of riddles and contradictions. What's half full and half empty? What's the thing you need but you don't want? And what is only one leg in the morning but three by night? And the answer to all of these is the Chinese economy. The growth rate of the Chinese economy has been dominating global headlines since Monday, October the 18th, when China's National Bureau of Statistics announced the GDP rate and performance of key economic indicators for the third quarter of this year. What's the most striking contradiction? Well, according to some reports, China's GDP did well, growing by 9.8% year-on-year in the first three quarters. And according to others, it braked, stumbled, and got walloped by COVID-19, the energy shortage, the floods in northern China, the housing market, and other menaces. Let's clear this up first. GDP growth is the overall state of the economy. Though the authorities release the figure every quarter, you get the accurate picture only after the end of the year. Against that background, let's break down China's numbers. For Q1, GDP increased at a galloping 18% year-on-year. Q2, it grew by 7.9%, Q3, 4.9%. So the overall growth so far is 9.8%. But of course, if you want to downplay it, focus on the lowest figure and call it disappointing, like this CNBC report. China's GDP disappoints, third quarter growth slows to 4.9%. Or this one from Al Jazeera, China's economy slows. Officials say recovery unstable and uneven. Besides basing the headline on a glass that's half empty, the CNBC report chooses to highlight the less satisfactory figures mentioned by Chinese authorities. Besides the 4.9 for Q3, industrial production rose by only 3.1% in September, below the 4.5% expected by Reuters. However, the Chinese authorities also mentioned positive outcomes that are crucial for understanding the Chinese economy, such as exports and imports grew 23% in the first three quarters. Retail sales rose by 16%. Production of new energy automobiles jumped by over 170%. Which should have been newsworthy since business reports love big figures, but maybe not when they're coming from China. The service sector recovered. In the first 8 months, the business revenue of service enterprises above designated size rose by nearly 26%. I could go on. Similarly, let's take a look at Al Jazeera's headline, which is based on just one part of a comment from the National Bureau of Statistics, which is, we must know that current international environment uncertainties are mounting and the domestic economic recovery is still unstable and uneven. But there were so many other things that were also said as well. Let's have a listen to this.
All regions and departments strictly implemented the decisions and arrangements made by the CPC Central Committee and the State Council, coordinated both the epidemic prevention and control and the economic and social development in a scientific manner, enhanced cross-cyclical adjustment of macro policies, and effectively responded to multiple tests of epidemic and floods. As a result, the national economy sustained its recovery and development, with all major macroeconomic indicators falling in the reasonable range. The overall social situation was harmonious and stable, with generally stable employment, increased residents' income, balanced international payments, adjusted and optimized economic structure, and steadily improved quality and efficiency.
Al Jazeera's report did have positive comments from a Chinese expert who said China remained confident it could reach growth of about 8% for the year. That would make China one of, if not the best performers among the larger economies in the world, he said. And this assessment was vindicated when the International Monetary Fund released its forecast for Asia a day after China releasing its GDP number. The IMF estimated that the Chinese economy will grow by 8%. So had Al Jazeera chosen to base their headline on this prospect, they would have been a little bit more far-sighted. You see, good news rarely makes the headlines while bad news does, but remember, bad news is only often part of the story. Now, while scouting through the many articles on this subject, I've also spotted some contradictory ones, a pair of which is actually hilarious. How many legs do you think the Chinese economy has? Just one, according to CNBC. In this video, titled "China's Economy is Now Basically Standing on One Leg," which was made before China's GDP announcement, a financial expert talks about China's property giant Evergrande's debt problems and whether they would affect the Chinese economy and trigger a global crisis. This is what she says.
The longer term risk is that when policymakers are aggressively reining in leverage or investment in real estate sector in the less productive sectors, the old Chinese economy, there is no alternative. It's not replaced by other growth drivers. So now Chinese economy is basically standing on one leg, which is exports. So that, I think, is a 6 to 12 months risk to Chinese economy and to the financial markets.
Well, the assessment is fine in itself, but when you base your heading on that one comment because it sounds sensational, it gets out of context, creating a sense of doom which neither she nor the actual figures support. And then from one leg, the economy suddenly develops two more. In this Wall Street Journal report, China's economy rests on three shaky legs. Let's see what these three rickety legs are. The property sector, consumers, and exports. The article warns that what happens in 2022 depends on how fast Beijing dials back its squeeze on the property sector, whether consumers finally perk back again, and whether exporters can hang on to recent market share gains. But what it says subsequently shows that actually none of the legs are shaky. For the property sector, measures are being taken. The report itself admits exports remain robust and retail sales bounced back. So where's the shakiness? About the exports, there seems to be the assumption that China's exports are up because other exporters are still down due to COVID-19. And once these countries are back in business, China's market share will tumble. Well, I'm concerned the Wall Street Journal is having sleepless nights, so that they can sleep easily. Here are some facts. In 2020, China became the EU's biggest trading partner, overtaking the US. China has remained ASEAN's biggest trading partner for over a decade and recently became Japan's biggest trading partner as well. Exports to Japan crossed $140 billion in September. So rest assured, Wall Street Journal, China's exports have been growing and will most likely continue to do so. Finally, we are also surprised by some media reports pleasantly. They give a rather accurate picture, a well-fleshed-out background, and what the authority says without distortion or picking just the sensational bits. Financial Times, for instance, gets it fairly right in this report. China's economy grows 4.9% in third quarter as momentum slows. The headline indicates it's a growth, though slower, and the following line indicates the reasons, one of which is a worldwide crisis. The report also mentions the other reason, a property slowdown, without trying to trigger fears that this could lead to a global financial meltdown, as some have done without justification. The Evergrande situation is described factually and in a balanced manner. The developer missed a series of bond payments and they did have an impact, but the impact was a collapse in investor demand for bonds issued by other property groups. It did not parallel the situation in the US in 2008, when financial services firm Lehman Brothers went bankrupt, triggering a global economic crisis. In fact, the FT report also quotes China's central bank as saying the Evergrande spillover is controllable and includes data that property investment rose almost 9% in 2021, while fixed asset investment was up 7%. Perhaps the most credible part is to include comments by Chinese official and economists that the impact of tight energy supply on the economy was temporary and the real estate market had generally stabilized. So, love it or hate it, it's an undeniable fact that the Chinese economy is a major growth driver of the global economy. Last year, China's GDP rose by accounted for over 17% of the global GDP. China's rise and fall affects all countries around the world. When the slower GDP growth was announced Monday, European markets closed lower, so did many stocks in the Asia Pacific. So this Schadenfreude about Chinese economy is rather misplaced. As I mentioned before, according to the IMF, the Chinese economy is expected to grow overall by 8% in 2021, which is no mean feat when you look at the forecast for most other major economies: 6% for the US, 6.8% for the UK, and 2.4% for Japan. With that, it's time for a break. After that, we'll discuss the things everybody is worried about. Will China's property sector lead to a financial meltdown? Will the energy crunch hit supply chains worldwide? For answers from experts, stay with us.
Rosa Benta is in a bind. The 69-year-old Brazilian has to decide whether to buy food or the fuel to cook it.
When I have money for cooking gas, I can't afford to buy rice and beans.
Brazil depends on hydroelectric generation for 2/3 of its power, and it's in the midst of its worst drought in almost a century. The government, in response, raised the cost of energy, leaving people like Rosa to foot the bill. Rising energy costs are a big concern for countries further north, where lower temperatures are settling in. Gas prices in Europe are up almost 600% this year. It's partly attributed to low inventories and surging demand in Asia. The finger has also been pointed at Russia. President Vladimir Putin says reliance on market forces and poor planning is the actual cause.
Gas consumption depends on the season. During the summer season, gas reserves are generally supplied ahead of the winter season. But this year, even after the cold winter in Europe, many countries did not do that.
Green energy is also being blamed. The European Union denies this, saying it's because of reliance on fossil fuel. The European Council will meet this week to discuss how to increase supplies. The UK is the hardest hit in Europe by the energy crisis. It also says reliance on fossil fuels means it's time to change.
Our exposure to volatile global gas prices underscores the importance of our plan to build a strong, homegrown renewable energy sector to strengthen our energy security into the future.
The United States, the world's top producer of natural gas, is seeing price hikes as well. Bloomberg reports American utilities will use over 20% more coal to make up for the rising costs. Prices in the U.S. have jumped by almost half this year. Oil and natural gas prices have been increasing in tandem. Energy Secretary Jennifer Granholm says the U.S. can tap into its oil reserves to bring down what Americans have to pay at the pump. Northeast China was one of the first places in the world to see the onset of higher prices. Rolling blackouts hit late last month. Local officials blamed the rising prices of coal.
This year's electricity consumption in the Liaoning region has increased 10% year on year. Most of the electricity in this season comes from the thermal power. However, with coal prices running high, some of the power plants have to slow or cut their output amid high demand.
China says it will raise the cost of electricity on the private sector. Energy authorities say it will mean power generation will no longer be a loss leader. The International Energy Agency says rising fuel costs may increase inflation and make a global economic recovery amid an ongoing pandemic more difficult.
Welcome back to Headline Buster, brought to you by The Point with me, Liu Xin. My guests are Chris Craig from Andlinger Center for Energy and Environment of Princeton University. He's joining us from Brisbane, Australia. Wang Dan, who is Chief Economist from Hang Seng Bank, she's joining us from Shanghai. And Professor Li Xiang, Associate Professor from the Institute of Energy from Peking University, is joining us from Beijing. Warmest welcome to Headline Buster to all of you. Let me start with Chris. What is your read of the Chinese GDP figure that was announced at the beginning of this week, namely 9.8% so far for the first 3 quarters, but 4.9% for the third quarter, and the IMF's prediction a day after that is 8% overall for the year?
Yeah, thanks. Look, I guess my first reaction is, and I'm not an economist, but I seldom take much notice of a headline, and I'm generally cautious about a single quarter headline GDP number. I tend to prefer to take a look at the underlying things that are going on in the economy, and I think you summarised them well. And my sense is, whilst there are some mixed signals, it's mostly strong. You know, I do believe in the 3 legs, and I think, with the exception of perhaps property, I think it generally seems strong to us. And finally, I never underestimate the Chinese economy and the leadership to actually manage its way through these ups and downs. So I think, you know, in generally, I'd be optimistic. I think you are, you know, one of your legs is the export economy, and you are, of course, then subject to what's going on in the rest of the world. I would be a little nervous about the northern winter, and, you know, I think this pandemic is far from over. So, you know, it'd be interesting to see just how we survive the next winter in the northern hemisphere and in terms of growth. But generally, I'm quite positive.
Wang Dan, let me turn to you. What is your read of the mixed numbers?
While the investment and retail figures are a bit lower than the market consensus, but I do think the choices are intentional. When we look at the government policies, in fact, the signals were quite clear early on in the year. And we have seen that the zero COVID strategy have, in a way, depressed the consumption and services, but still the recovery is underway. And then the local government are so concerned about their debt level. So the infrastructure spending is basically stalled. And on top of that, there is also the tightening regulation in the property market, which had been the true engine for China's growth post-COVID. Overall, this, in a way, a lopsided economic recovery had been the case, but there is really no downside surprise to the market.
Professor Li, what is your take of the figures, and how much of a factor is energy in the kind of numbers we're seeing for the third quarter?
Well, thank you for asking. I mean, this is pretty clear that property market, energy, and our pledge to the international society on carbon neutrality basically drive the economic figures for this quarter. I mean, for short term, this is not quite significant, but in the future, in the long term, I do believe the Chinese figure will look much better. I think the IMF actually underestimate Chinese ability to counter the risk for the downturn of GDP number. And in the future, for our under the carbon neutrality pledge, the Chinese economy structure will be adjusted, and the greener energy and the energy sector transformation will happen in China faster and faster with more renewable energy deployment. So I think in the short term, this may be a problem, but in the long term, it is for sure that China still have a very great future ahead of us.
Let's focus a little bit on the energy front. Chris, let me turn to you again. Some people seem to have a particular focus on China, as we have known in the Northern Hemisphere. For instance, energy supply and prices have been very much in the news. A recent report says China's energy crisis is hitting everyone, from iPhones to milk, rippling through the globe and hurting everyone from Toyota to Australian sheep farmers to cardboard box box makers. So, Chris, how do you assess China's energy crunch? Is it putting a strain on the economy? Is it having a domino effect, as such a report has indicated?
Look, I've got no doubt, but again, I think this is probably short term. I mean, we've got a supply crunch in terms of energy supplies, and that's causing some problems, particularly in the Northern Hemisphere, and not just China, throughout Asia and Europe as well. But, you know, we can respond. The market will respond to these supply crunches, and supply will come back into balance. And I think that will bring pricing back under control, and I think this will be alleviated. Now, that takes some time. It might be 3 months, it might be 6 months, but I'm expecting a recovery. And I think these kind of ups and downs, again, as we transition to a low carbon economy, we're gonna have trouble, and we're gonna see these navigation problems.
Professor Li, you are very much focused on the energy as well. So some financial researchers have said that government, or the Chinese government, will most likely to ensure energy consumption at homes during this upcoming winter, therefore affecting manufacturing, which could impact global supply chains. What is your take?
From my perspective, I don't think this will happen. The reason is twofold. For one, the Clean Energy Heating in China initiative actually kickstarted in 2017 for northern part of China, which is most likely to have winter heating, are basically supplied by gas and by coal. It is not by electricity directly, and plus the electricity price is very high and can't be afforded by most of the urban area and rural area as well. And second, for the government, I believe the Chinese National Development and Reform Committee and the National Energy Administration both take very solid measures to guarantee the supply of energy to supply the winter heating, and there's not going to be a problem for that. And for the electricity sector, I think the electricity most supply for the manufacturing, and it is not going to be a huge portion for winter heating.
Let's come back to the economic prospect for the whole year. And Wang Dan, let me turn to you. Last year, we had a rather peculiar situation as well when China's economy dipped dramatically for the first quarter because of the COVID outbreak in Wuhan, but it gradually picked up momentum for the rest of the year and finally registering positive growth, one of the few among the major economies. So how do you look at the kind of a sense of pessimism that we have seen around global media this time around? What's driving this?
Well, I think a trigger point is that the Q3 GDP is only 4.9%, and people and the public are not used to a figure below 6%. That was the case for China with double-digit GDP growth for about 30 years. But then in addition to the GDP figure, there was also a pile of new regulations in the market that have been really a shock to many of the foreign investors. And people have seen that the tech crackdown has been going on for a while, and there's no sign of relaxation. And property regulations seem to be tightened, even if the economic growth is slowing down. So it seems that the central government is willing to make the trade-off between economic growth and financial stability. I do think the end goal is clear, that the regulators eventually want to create a better environment for China's growth in the next 20 years. So they are trying to make it clear on what type of data that the companies can use to generate revenue, and on what type of activities that property companies can do in order to deleverage and also provide enough housing for the public. So in the short term, though, the policy uncertainties in those areas are kind of still a big concern for investors.
Help us understand. I mean, market psyche is important. I mean, especially when everybody is, still dealing with the COVID-19 and talking about uncertainty. Why does China decide it is worthwhile to go ahead with all of these difficult reforms or policies and go ahead with the trade-off that they think this is sustainable and meaningful? Wang Dan.
Well, I think China's now has shifted its focus on reaching some of the longer term goals, which is to improve the quality of the people's life and also to reach a sustainable development model. And that's why we have seen that climate change policies have been high up on the agenda. And even if with the economic slowdown, and for many regions in China, it's really hard for a lot of factories to pull it through. But the carbon emission cutting goal is quite clear. And to reach that goal, there has to be some drastic measures to upgrade China's industrial supply chain. And in this process, many industries have to bear the cost, especially those polluting, high energy consuming industries. And coal and steel are at the forefront of this effort. But also, I think for China, it's about time for it to tackle some of the long-term issues and some of the really difficult reforms, including the ones in education and healthcare. And for education, especially, there were a lot of oppositions from the legacy system, since schools and local governments all have their different agenda. But taking advantage of what's going on this year, in fact, we have seen that China has achieved probably more in this year than in the past decade.
Chris, let me turn to you. These policies have been drastic and the effects have definitely been very obvious on some of the suppliers of energy, for instance. How do you think these policies should be looked at, and how are they being looked at by foreign investors?
Look, I think, every country that's embarking on a carbon neutrality target, and that number is increasing, is going to face these same changes. They're going to have to make really strong and difficult policy decisions now in order to achieve the long-term outcomes that the world wants to achieve. And China is no different. I think whenever you invest at a time when there's uncertainty and things are changing, it's always going to be nervous for investors. But I think investors are nervous in most jurisdictions undertaking this challenge. I see much more upside for China in the clean energy transition than I do as downside. China controls many of the supply chains that are critical. So I think there's short-term pain, but actually in the long run, really strong benefits for China.
Let's take a look at a comment from our online viewers who have been following the live streaming. They say, it says from Galungong, I don't know where it comes from. It's on YouTube. It says, China should not be concerned about what their enemies in the West think of China. It is the West's own detriment if they cannot accept China's rise. Reality will catch up to them sooner or later. Professor Lee, I'm going to give you the opportunity to react if you want to, or to follow up on the question about energy and the pain that China is willing to take right now as the economy is facing multiple challenges.
Thank you. I'm willing to take the question, and I think it's actually very helpful to answer this question, because I previously worked at the International Energy Agency, and I still remember we launched the 2017 China Special Report on the World Energy Outlook. And during that launch event, our executive director announced that when China wins, the world wins. When the world benefits and China benefits. So I think China plays an important role, not only in the economic sector, but also in the energy sector. I think for China to take the flag and take the lead in the future to fight the climate change issue, it is going to be beneficial for the whole society, for the whole world.
Okay, on a final note, I'm going to ask you for a vote on how many legs the Chinese economy has right now and how many it should have, because that has been the report that's really quite fun while preparing for this headline buster. Chris, I remember you talked about the 3 legs thing right just now. So you're for the 3 leg? You want to add a little bit?
At least.
At least.
I would say,
so.
Yeah.
Exports, real estate, and consumption, right?
That's
These
correct. And I think China is a comprehensive economy and an important one. So, yeah, I vote for the 3.
At least 3. Okay, Wang Dan.
I'll vote for export, manufacturing investment, and also retail market.
Okay, manufacturing investment. You want to
Right.
explain a little bit?
Well, in China's investment, there are mainly 3 components: infrastructure, property, and manufacturing. We have seen a collapse, basically, in infrastructure spending, and also property investment has slowed significantly, but manufacturing investment is surging, especially when you look at the investment in high-end manufacturing, new energy, new material. The R&D investment is unbelievably fast. So I think it will lay the foundation for China's economic growth in the coming 20 years, and we're only at a starting stage.
Okay, but it doesn't have to be 3. I mean, if you want to add, you can say 4 if you want, or
Right.
centipede.
It
Okay,
could be.
okay, mainly 3. Professor Lee, finally.
I actually agree with the 2 experts, as in particular Wang Dan, and I want to emphasize and highlight the importance of energy sector. I mean, energy sector for China previously dominated by fossil fuel, especially coal, but in the future, it's going to be dominated by renewable energy. This is clearly stated in our pledge to the international society by President Xi Jinping. And plus, in the future, the new energy and renewable energy is going to be the main driver for Chinese high-end manufacturer. And in the future, I do believe it is China's turn to take the lead in the renewable energy like solar PV, wind, and battery.
Okay, thank you so much. We're going to leave it there. Thanks for those insightful discussion. My guests have been Chris Craig from Endlinger Center for Energy and the Environment from Princeton University, Wang Dan, Chief Economist with Hang Seng Bank, and Li Xiang, Associate Professor with the Institute of Energy of Peking University. Thank you so much. And many thanks for all of you who have been following us on your new media or on TV. As usual, I'll see you next week at the same time on Headline Buster. Don't forget to follow me on Facebook or Twitter using the handle Liu Xin in Beijing. Thanks for watching. You've got the point. Okay, hello.
We have a great show today.
Thank you.
It's time to look at the comments.
If there have been
here.
Yeah.
See here.
Okay. So. Yeah. People asking what has Chinese communists done to the people? Examples from this guy called Richard Leung. Well, if you don't know any example by now, you're not living on this planet. Please ground your feet, come back to the world, and open your eyes and see what China has done to its people. I think it will be an insult if I have to explain that. I'm sorry for the strong language, but that's how I feel. Okay? Burn the coal, China. How many new plants this year? Well, China has considerably slowed down the consumption of coal-fired power, and China has pledged not to build any more coal-fired power plant in the world, and that's a new pledge. From Discover China, Tanso Zhongguo, good show. Thank you very much. From Stephen Rodriguez, thank you very much. From West Power should recognize and appreciate what Chinese communists had achieved and done to their people. From Diara, I couldn't reach that. Okay. So River, balance. I like balance. Balance is always good. Any other comments? Yeah. So Huang Tua says, yes, they dumped down the population, and when they're away, they will find China has moved ahead again, and then they can only rail against China. I think that is a nice way to put it. I mean, which reminds me of an encounter I had in Greece 2 to 3 years ago. I was there with a technician. He was using Chinese-produced drones, and when I said, "Oh, you know, there are new models coming up," he said, "Please, China, can you slow down?" They can't even catch up with it. So I think it is to everybody's benefit. They can be balanced, if they can be properly informed about what's happened in China. Of course, not just the good news, but also the problems, the challenges, so that they have a good understanding of what, you know, 1/5 of humanity is doing on a daily basis, and so they can benefit from it or learn from it, or, you know, draw the lesson, however you want to put it. But you have to know every side of the story. Okay, I think we've spent enough time together. Good for a Thursday morning. I hope to see you next Thursday, possibly, or the week after, depending on how I feel. All right, thank you very much for following us. Bye-bye.
Bye. Thank you for your hard work.
Bye-bye.
Bye.
Bye. Thanks for the ticket, by the way.
Okay.
From my heart to your heart. I like that.